It is time now for Trading Nation, and why don't we just dig right on into this big old fat market rally. We got Gina Sanchez of Chantico Global and Rich Ross of Evercore ISI. And Rich, I know that all the headlines were sort of the Clinton bounce and Clinton rally today, and perhaps they are. But I will note technically that after a 9-day drop, we bounced almost precisely off the 200-day moving average for the S&P 500. I'm not going to ask you to dive into politics, but how much of this rally do you think may be simply technical timing?
Well, Brian, I think all of it is, and that's the point of the market that we've been in for basically the last 3 months. Well, clearly, I have some concerns here, and I think the recent decline is more than just a byproduct of partisan politics. Obviously, politics are overwhelming price action. As it pertains to the charts, to your point, Brian, we were down 8 days in a row. That's sort of a rare occurrence. You were up 9 in a row on the VIX, which is unprecedented. That's a contrarian indicator. The presence of that support at the 200-day moving average, the most oversold conditions on the RSI all year, all of that has set you up for this tactical bounce. And I actually think in the short term, if Hillary Clinton were to win the election, we would see an extension of this advance. The way I see it, 2190, if Clinton wins, if Trump wins, I actually see it going the other way. Potential downside to 1948, where Dewey defeated Truman down in 1948. So once again, Clinton more positive in the short term, and we see that today. Now, key point here, Brian, I'll just finish up on the transports. This gives you reason for optimism. You're breaking out to a new high for the year in the transports, in the airlines, in copper. So those are things that are typically associated with a more bullish backdrop. So once again, the Clinton victory gives us 3% upside to 2190-ish, possibly even a marginal new high. And a Trump victory takes you down almost 8, possibly 10% to that 1948, 1950.
Okay, technical view there. So he stripped the emotion out of it, Gina. But do you believe that a Trump victory is going to send us down 10%?
I think it could. I totally agree with Rich that the downside is far worse than the potential upside of a Clinton victory. Now, I do believe we're going to have a Clinton victory. That's our current view. And I do think, and I absolutely agree that transports would be a huge beneficiary of Clinton's plans, economic plans. Oxford Economics modeled this, and we saw a tremendous potential bounce. But when we modeled Trump scenarios, Oxford Economics showed that the potential downturn in the economy could be devastating if he were even allowed a fraction of what he was trying to do. So I think that the market drop could actually be 10% or more.
Wow. Gina Sanchez and Rich Ross, we could probably go for another half an hour, but we cannot due to time. We'll see you soon, though. Thank you. For more Trading Nation, head to our website, tradingnation.cnbc.com.
When it comes to investing, there are really two popular methodologies. Fundamental analysis, which focuses on things like revenues, earnings, and cash flows, and technical analysis, which focuses on chart patterns, price movement, and momentum. Most successful investors employ some combination of both methodologies when making investing decisions.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.